So what we have here is a simple parent and subsidiary relationship, and we're going to consolidate the two statements of profit and loss. We do this by simply adding one to the other. Could not be more simple. So parent and subsidiary for the revenue, cost of sales, parent and subsidiary, which gives us a total of 37,000 minus 15, 22,000. The dividend from the subsidiary, which we'll see is here, we don't include because we're going to not include it down here either. And really it's the subsidiary paying a dividend to the parent, so within the group we can just ignore that transaction. So we'll just leave that as 0. Gives us a profit before tax of, well, that's still 22,000. We add together the two income tax expenses. Parent and subsidiary gives us 6,200. Gives us a total profit after tax of 22,000 minus the 6,200 is 58. And the dividend here is just a dividend going out of the group. So in this case it's the parent only. 1,000. As we said earlier, this dividend is going straight to the parent, so we don't need to include that. And that gives us retained earnings of the profit after tax figure minus the dividend going out of the group, 14,800, and that makes sense because it's the same as these two added together. So let's just review what we've done here. We've got parent and subsidiary added together. We've got parent and sub here. This we've ignored, which is the dividend from the subsidiary. We don't include that. The income tax expense is parent and sub. And the dividend here is just the parent dividend going out of the group. So that's 1,000. Or rather, let's say parent only. Which just leaves a simple calculation for retained earnings of 14,800. So that is the simple consolidated statement of profit and loss.